Hello, everybody, and welcome to the Open eCry market commentary for the week of September 16th. My name is Toby Gennaro from Trade with Precision, and we'll just take a look at what's on tap for the markets this week. And so we had some pretty big news come out this weekend out of Geneva. Had Secretary of State John Kerry talking and meeting with the Russian foreign minister, talking about some type of an agreement to get chemical weapons out of Syria. And so we had a pretty big move here. You can see on a lot of the charts. Just a huge spike up based on that news means that chances of a U.S. Military strike on Syria probably fairly low at this point, provided that they can get everybody on board and get that issue resolved there and get those chemical weapons destroyed. So that's been a lot of the big news. And that headline primarily driving just a lot of the price action here in the last couple of weeks, actually the last month. So nothing really new here on the monthly chart, but as we look on the weekly chart, a couple of weeks ago, just had that nice setup candle, and then last week got a break of the high of that candle, and we're pretty much off to the races. Then we got some new news out this weekend, and then made that major gap up. So in the market open here Monday, we're going to have a significant gap here, right at that 1684 level. So be interested to see. We have a lot of overextension here. There's really a no trade at this point. Really looking for a pullback back into these moving averages on some of these lower time frames, even considering the overextension here on the daily chart. And then on top of that, we have what looks to be a weakening trend here. We have a higher high here, a higher high here. We have, again, a lower high on the indicator. And it looks like we're going to put in possibly another lower high on the indicators, even if we do break up beyond this 1705 level. So if we go back, the high there was... let's get pretty precise here. It was 1705 right on the nose, and then the most recent that we're at right now has been almost 1704. So we're basically right within a point of the previous high. So this could be a double topping pattern. We're not trying to call tops and bottoms here. We're trying to follow and trade a strong trend, but we do have some indicator divergence that's working here on a higher time frame. Now with strong trends like this across all the charts, these indicators can diverge for quite some time, but as you can see by the price action, we've had just a really nice clean run up here for just many months. Put in that high, got a nice deep pullback, and then as you can see, the highs are getting a little bit more shallow. Another deep pullback, and now we're back up to almost an equal high. And then considering in the months of September, October, just historically there have been a lot of major moves in the market. And so I'm not sure if that's going to happen again, but most of those moves have been to the downside. And so we'll really have to watch for what's going to happen this week right at this 1705 level. If we can get a close above that 1705 level, then I'd probably be looking to get interested in being long again this market. But right now, with a lot of the overextension, really have to wait for a pullback into some of these levels. 1684 looks like the most reasonable. And then more than likely you'd probably see a bounce there, and then we'll just have to see what happens. More than likely when you get divergence on higher time frames like this, we also need to couple that with some divergence on some of the lower time frames. And you can see on the daily chart we've had a higher high here, and then we got a higher high here with a lower high on the MACD and the RSI, and then another higher high. And we still had an equal high here, but we had a lower high on the MACD, and then we have basically almost an equal high here. And we're still trending lower on the daily chart for these indicators. So we have the same thing there on the weekly. It's going to take divergence across a number of time frames in order for more than likely to get any kind of a significant pullback. So I'd like to see some divergence here on the 240 and the 120 before looking at abandoning a long position. But in the meantime, wouldn't mind trading intraday, looking for pullbacks into these major levels of support, and then looking to follow the ongoing trend here to get long again. So right now there's nothing setting up. The closest thing I would see in the morning would be possibly a gap fill in the morning back to the 1684 level, and then looking for potentially a bounce off that level, maybe back up even to the high around 1704, 1705. So that's kind of what things are looking like. It is going to be probably a headline-driven market here for the foreseeable future until they get some of those issues worked out in the Middle East. But that's kind of what the call looks like for this week on the big cap stocks. And moving over to the small cap stocks, looking at the Russell 2000 futures contract. Again, just a long trend here on the monthly chart, really looking for that monthly pullback to a safe level. As you can see here, really the only level there is right around that 860 level, which is a long ways away. But again, it puts us that pullback would be just very reasonable, putting us right back within the 10-20 period moving average, right within that buy zone. And then once again, looking at that level there, but very difficult to call those. We'll have to see what happens here on the weekly chart. We can see that we're right back up to a new high, and let's get a little precise with these numbers here. The most recent swing high there was 1062, 1059.60, yeah, so 1062, and then recently with the Middle East news, we just put in a new high there at 1066.20. So I'd be interested to see what this candle looks like at the end of the week. Whether that's bullish or bearish is going to tell us a lot. We've broken above that level. The question is, can we get a close above that level, or are we going to get rejected off of that level? As you can see, there's a lot of overextension from the moving averages right here. Same thing on the daily chart. We don't really have all of the moving averages in alignment. We've got the 10 and the 20 in alignment, but the 50 period moving average is out of alignment. So it'd really take another move significantly higher to get everything back in alignment again. But as we go down to the other charts, we can see that on the lower time frames, we can still find something tradable here on some pullbacks to some solid support levels, like right around that 1052 level. So we move down to some of the lower time frames. On the 240, a pullback into that 1050 level would put us right in and amongst that 10-20 period moving average. Same thing on the 120-minute charts. There might be a setup there happening initially in the early part of the week, but again, we're going to have a pretty big opening gap there on Monday morning, so we'll have to see what happens there, and if we're going to get that anticipated pullback to that 1050 level to close the gap. And yes, that's what it looks like. So still, again, little different scenario here on the indicators. Don't have the same divergence that we had on the ES futures, so things look a little bit more bullish here on the small cap stocks. But again, cautious here on a lot of the headlines, coming out politically, and all the issues going on there in the Middle East. And so really want to see what happens here weekly in this getting this close above that 1062 level. If we can get that and then have the moving averages catch up to the price, then any close above that, I'd be interested in potentially getting long this market again. But for right now, really looking for some intraday trades, looking for maybe this pullback to that 1050, and then see what that looks like. If we can get a bullish candle on some of these intermediate time frames, I'd be interested in getting long there. But not necessarily interested in swing trades at this point, and just looking to try to go with the market momentum here, going long and looking to do that on an intraday basis. Let's take a look at one more index here, looking at the NASDAQ 100 of the largest technology corporations, and nice trend here on the weekly chart. The NASDAQ has really been making some nice strides, and as we can see, the most recent level that we broke out of was right here around this 31.45 level. Let's get precise on that. 31.48, 31.47. Yeah, so I had that nice flat level there, right around that 31.47 level. You can see it a little better here on the daily chart. And it looks like if we get a bearish candle here to close out of this week, it looks like we might be have the potential of getting a pullback along with the other indices right back into that 31.46 level, which is a very nice level of support, and more than likely we'd see a lot of buy orders accumulating there as well. We can see that setup right here again on the 480 chart. The only thing in the way of that would be the support level right at roughly 31.82. So a couple of nice levels there. I really prefer the 31.46. Don't know if this looks any different on the lower time frames. Again, all the charts have this big gap on them based on that news coming out. So obviously that's not optimal, but it looks like things are looking pretty bullish here. We don't have any of that divergence on the higher time frames here. Things are still converging up with price. Tells us that the trend is very strong. Based on this consolidation right here at this 31.47 level, consolidated down from basically almost 100 points And so 100-point move consolidation typically tells us it's going to be possibly a 100-point move to the upside, which would put us right around 3250. And we basically just got to that 3200 level, basically 3213, so it'll only be like another 35 points above that high, which could certainly very well happen. So just making sure we just pick the right opportunities here to get in at the appropriate levels where there's good solid support. We don't have anything diverging here that would tell us otherwise on the NASDAQ, so things look pretty solid here. But we do have a little divergence here on the 240 and a little divergence here on the 120, but not much. So we'd really have to see a pretty good pullback here and get rid of all this overextension that we're seeing here, at least get a pullback to a level within a buy zone in order to get long, and then look at that trend flow strategy set up to begin to stay long this market. So even again, just by looking at this chart, still a little cautious across all the indices. Nothing is really convincingly saying to jump into this market and get long like we're going to take off and be off to the races here for continuing new highs. But I think we're going to be anticipating a pullback here in the early part of the week. We've had a pretty nice run here over the last week and a half, and so I think folks have been doing a lot of profit taking and potentially selling the news is what I would think, and then kind of waiting to see what the next step is going to be out of the Middle East and what's going to happen with that situation there. So overall, once again, bullishly cautious on the markets for this week, and looking to see what shakes out in terms of some of the headline news. So there's the outlook for the markets this week. Taking a look at the U.S. indices, we also like to issue a reminder for the webinar this week on the 17th, which is Tuesday, 8 o'clock Eastern Time. We'll be wrapping up part 3 of the Advanced Strategy course. And then also we have on the 18th, which is Wednesday, we have the midweek market commentary as well, looking at some different hot markets for trading opportunities. So I'd like to thank you all for watching the OpenECRI market commentary for the week of September 16th, and we look forward to speaking to you next week on the Market Update.